This is CGTN, China Global Television Network.
This is Global Business. Hello and welcome to the show. I am Peninah Karibe. Let's begin with a look at the markets. Positive numbers from major markets across the continent, but Nigeria, where the all-share index shed 574 points. But despite the gloom, some positive movement was seen in the property sector, with the UACN Property Development Company leading gainers on the day. The company's stock closed 9.59% stronger at 90.80 naira cents. In South Africa, the market is still absorbing news that the MTN Group plans to sell off its 20% shareholding in Belgacom International Carrier Services to Belgian state-controlled telecoms firm Proximus for $121.4 million. Coming up on the show tonight, a British court allows Nigerians to sue Royal Dutch Shell over years of oil spills. Egypt requires all banks and listed companies to have at least one female director on their boards. And the Ugandan startup that's made garbage collection as easy as a mobile application. So the UK Supreme Court has allowed a group of Nigerian farmers and fishermen to sue Royal Dutch Shell for contaminating land and groundwater following years of oil spills. 42,500 people are involved in the case that will test whether multinationals can be held accountable for the acts of overseas subsidiaries. Nigeria's Ogale and Bila communities allege that their lives and health have suffered because of the repeated oil spills. They argue that Shell owes them a duty of care because it either had significant control of and was responsible for its subsidiary SPDC. The ruling is the second loss for Shell this year regarding claims against its Nigerian operations. In a landmark Dutch ruling 2 weeks ago, an appeals court held Shell responsible for multiple oil pipeline leaks in the Niger Delta and ordered it to pay unspecified damages to farmers. Let's discuss this further with Deji Batmas, who's live for us in Lagos, and Elena Casas live in London. Elena, let me begin with you. Shell had argued that it could not be held legally responsible for its Nigerian subsidiary. And we know that last year, the Court of Appeal agreed with the company. So why did the Supreme Court overturn that ruling?
Well, Shell, as you say, was arguing to have the case heard in Nigeria, and the Supreme Court has now ruled the parent company here in London can be held responsible. It overturned the earlier decision on the grounds that the Court of Appeal had materially erred in law by conducting a mini-trial of the evidence. What's interesting here is that the ruling potentially paves the way for more environmental claims to be brought in London's High Court against multinationals over actions anywhere in the world. So a case is now likely to be brought against Shell in this country, although unless the company offers a settlement sooner, that's likely to take another 2 or 3 years.
All right, so Deji, this is of course great news for the affected communities there in Nigeria. What reactions are you getting from there?
Well, there's huge excitement now coming out of those communities, especially in Rivers State. The communities are actually in Rivers State, in Ogoniland to be precise, an area that has been impacted severely now by oil spillage and pipeline vandalism. So the people are really excited. Some people didn't see this coming, but then when the farmers decided to take up this case and take it to the UK court, they had that inkling that they were going to get this kind of verdict. And so there's huge excitement, not just for the community too, I should say, also for civil society groups that have been on the side of these communities now in the Niger Delta for decades, fighting some of these IOCs as the multinationals now operating in that region, making a very strong case now against not just pollution, now also against gas flaring and all of that. So for them, they believe this is a clear vindication of the efforts they have put in all over these years.
Elena, this is the second loss for Shell this year regarding claims against its Nigerian operations. How has the company reacted to this ruling?
Well, Shell has consistently argued that the spills are caused by oil theft, illegal oil refining and the sabotage of pipelines by local communities. And the company says it does clean up spills regardless of the cause, which local people, of course, dispute. Now, Shell says it continues to suffer from theft and sabotage. And when it announced its annual results last week, the CEO, Ben van Beurden, said the firm was taking a hard look at its onshore oil operations in Nigeria, and it has already begun gradually selling off its properties in the Niger Delta. So it's concluding perhaps that they might be more trouble than the oil is worth.
So, Deji, like Elena is saying, Shell has consistently argued that the spills are as a result of sabotage of pipelines and illegal oil refining. How much of a problem is this in these areas where the spills occur, and how is the government handling that?
Well, it's a serious problem, no doubt at all. Oil theft, vandalism, and oil bunkering actually take place in the region. It's quite rampant. But the argument is that, look, for some of these activities, they would not be happening if some of these multinationals like Shell, were doing their part to ensure that, for instance, these communities are well taken care of, that the communities are that they carry out CSR in these communities, and that people of these communities are given employment and what have you. Besides that, there's also the argument that, look, some of the facilities that Shell, for instance, deploy in its operations in Nigeria are actually antiquated. They are old and obsolete. These are facilities that they actually would not use in places like Norway and other places now in the world where they have their operations. So they deploy these old, antiquated facilities now without regard for the communities and the dangers they pose to these communities now. So yes, it's true that you have the problem of oil theft and vandalism on one hand, but the truth is that a lot of people will tell you that some of these IOCs too are not doing their part to ensure that even when they have this spillage, that they go in there and carry out remediation efforts. Now, what is the government doing? The government is actually carrying out remediation efforts in Ogoniland. Ogoniland, by the way, the two communities, Bile and Ogale, are actually part of Ogoniland. The federal government has been carrying out remediation program there after the United Nations Environmental Program actually released the report now detailing the extent of the damage that has been done to the environment. They're quite massive. But that program actually started, I'm talking about the remediation program, started in 2012. Up till this moment, the estimation is that the government has not done even up to 11% of remediation exercise in that community. So not much has been done. A lot of money has been spent. A lot of people will tell you that, look, they can't actually see so much on ground. And it will take a long time, and it's part of the reasons why these people decided to go to court, and then that despite the remediation program, they should be compensated because they've actually lost so much. They've lost their livelihoods. Some have actually died as a result of the damage done to the environment, and that's what their case is actually about. So in spite of the remediation program, they're still demanding compensation. And I think that is where this whole thing is going to end up. So it's now up to Shell to decide how quickly it wants to open talks now with the people and start a process of compensation now that will be acceptable to the people so that this can be resolved very quickly. The people have made it very clear that they're actually not against Shell. They actually want Shell to continue to operate in the Niger Delta, but that Shell must do so with a responsibility, and that they want to be involved in Shell's operation to make sure they are carried along in whatever Shell does in their environment. All right,
Deji, we appreciate that. Deji Badmas in Lagos, Elena Casas in London, thank you both for joining us tonight. Now, Namibia has suspended all operations after a government decision to file for voluntary liquidation. The airline has failed to turn around its fortunes despite years of state bailouts. Finance Minister Ipumbu Shimi said about $569.8 million has been spent to bail out the airline in the past 10 years. Air Namibia said all flight operations will be cancelled, with all aircrafts returning to base. Lawyers representing Air Namibia and Belgian company Challenge Air South Africa reached an agreement to have the carrier liquidated.
The decision to liquidate Air Namibia was not taken lightly. All options were explored to find a lasting solution that is in the best interest of the airline, the best interest of the country, and the best interest of future generations. We have to take and endure some short-term pains for the prosperity of the Republic.
In some corporate headlines, Kenya Airways is ready to offer Kenya and other African governments robust solutions in the movement of COVID-19 vaccines. Cargo Commercial Manager Peter Musola says the national carrier has the capacity to handle about 300 tons of pharma at a go, with a transit window of 6 hours maximum. Vodacom Tanzania ended 2020 on a high note despite losing about 2.9 million subscribers due to SIM card registration issues. According to the company's second quarter trading update, its customer database rose from 14.9 million in September to 15.1 million in December. They signaled a return to winning ways despite having to burst services to just under 3 million customers between March and June. The Egyptian government has signed an agreement with Korean technology company Samsung to manufacture educational tablets in the country. This is part of a government strategy to localize the technology sector. Samsung had made previous offers to establish a tablet factory in Egypt with investments of about $30 million, which sources say is the company's estimated investment in the factory that will be set up to manufacture the devices as part of the agreement. The specifications of the device and its selling price will be agreed later. And L'Oreal's shares rose after the world's biggest cosmetics group reported higher than expected revenue growth for the fourth quarter. L'Oreal's online revenues jumped 62% in 2020 as a whole, reaching over a quarter of total sales. Luxury retailers and beauty companies have been hit by store closures, but cosmetics groups have benefited from demand for skincare products and treatments for use at home. Let's look at your corporate headlines. You're watching Global Business, coming up after the break. Coronavirus vaccines to supercharge Africa and global growth in 2021. And all banks and listed companies in Egypt to have at least one female director in their boards.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra. Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Now, COVID-19 vaccines will supercharge Africa and global growth in 2021. That's according to a joint report by Allianz Research and Euler Hermes. However, there will be short-term headwinds and complete recovery can only be expected in 2022. The researchers noted that despite the hurdles on the demand and supply sides, vaccine rollout to vulnerable populations should be completed by mid this year. Now, let's tear into the report. And Celine Oziut is the senior economist at Euler Hermes France and Africa. She joins us live now from Paris for more on this. So, Celine, you do talk about COVID-19 vaccines fueling growth in Africa this year, but also mentioned that short-term headwinds and a complete recovery next year will create transitional risks. What are some of these risks that you see?
Okay, given the shock we had, 2021 will be definitely a year of recovery. There is no doubt on this. But there are important risks, and these risks are sanitary. The second wave of the pandemic, it needs to get under control, and the different mutations of the virus make things difficult. And the main risk, of course, is the slow progress with vaccination campaigns.
All right, so your report also recommends attraction of private investment in Africa and, in your own words, more than ever as an engine of growth. What are the sectors that you see as prime for these investors?
The private investment is needed because there's less, almost no fiscal space from the government to stimulate growth. But for private investors, there are quite attractive sectors. First of all, I can mention digitalization. All digital services sectors have a huge potential of growth in Africa. And secondly, there is energy sector. Africa has a tremendous unleashed potential for renewable energies. And third, I would mention the agri-food industry, which has also strong potential for high returns and growth.
Okay, so having said that, we also know that you've mentioned several challenges that African countries face. There's, of course, increased public spending, there's loss of government revenues, but also most critically, I would say, is the rising public debt. Some even think to unsustainable levels. So given all of these challenges, how do you see, or how can African countries maneuver around them?
Debt sustainability was already an issue before COVID-19, but things got worse with this COVID spending. We welcome the initiative from G20 to give some relief to highly indebted countries, but at the same time, we fear that this initiative would not be enough, especially for tackling the private sector debt issue. So what needs to be done is to continue to attract private investment. And to do so, countries need to establish a predictable environment, and also they should have credible policies, both monetary policy and fiscal policy. But the good news is investors are willing to invest, and the interest rates are low in advanced economies, and they are set to stay low for a long time. So there is still big potential to continue to attract private investment and private capital to Africa.
All right, the World Bank projects global GDP next year to be 4.4% below pre-pandemic projections. And the World Bank says that gap is going to be twice as large between the emerging markets and developing economies and advanced economies. So for how long do you see the effects of this pandemic lingering on for, especially here in Africa?
In our baseline scenario, things will get back to normal in 2022 with the reopening of all services and the tourism sectors. But the downside, the main risk to this is the progress with the vaccination campaign. And I should emphasize that we cannot talk about a global recovery, a return to normal in 2022, if Africa is still struggling with the sanitary crisis. Therefore, there is need for greater international cooperation to move fast with the vaccination campaign in Africa in 2021 and also next year.
All right, and you also mentioned the risk of social unrest in several countries in Africa, including South Africa. Does that mean that the measures that have been put in place so far are not enough?
We should put things into perspective. I should acknowledge that African governments reacted at the incredible speed, and the size of the stimulus was about 2.5% of GDP on the continent, and which is a lot compared to the little fiscal space they had. But now the main problem is what is next? What comes next? And the main emergency is to create jobs. Unemployment is the main problem, but also in advanced countries. So governments need to create jobs, and to do so, it should be in the private sector, given the small potential we have now with all the mounting debt in public sector. And to create jobs in Africa, there is strong need to enhance access to finance to very small and small enterprises.
All right, Celine, we appreciate your time tonight. Thank you very much for talking to us. Celine is live for us there in Paris. Now, an increase in COVID-19 related borrowing is pushing Uganda's debt burden higher. According to the Ministry of Finance, a rise in expenditure requirements to support the government's response to the coronavirus has necessitated higher than expected borrowing. Latest figures show Uganda's total public debt grew from $12.6 billion at the end of June last year, or 2019, to $15.3 billion by June last year. This figure is projected to go higher this year. CGTN's Michael Baleka reports.
A second wave of coronavirus pandemic is sweeping through Africa, and the number of cases is rising sharply. According to the World Health Organization, a debt sustainability analysis report authored by Uganda's Ministry of Finance indicates that an increase in COVID-19 related borrowing is likely to grow the country's public debt.
Demands of expenditure have gone up because of COVID. They have gone up. Yet, the revenue to meet those expenses.
Uganda is also borrowing to finance transport and oil and gas infrastructure. The drive for new credit is expected to push Uganda's public debt from 41% in the last year to 54% by the end of 2022-2023 financial year, according to government projections. But the finance minister says the government is cautiously taking on new credit.
We will not go over the cliff. We are watching carefully everything that we are doing. You know, we are not supposed to go beyond the threshold of 50 of our GDP. So we are not very far from 50, but I want to assure you that we shall not go overboard.
Uganda has close to 40,000 confirmed cases of the COVID-19 virus, and at least 328 people have died. The spread of more contagious COVID-19 variants is raising more fears and could have far-reaching implications on Uganda's economy, which has already experienced disruptions in trade, like decline in exports and imports. Last year, Uganda enforced a lockdown to check the spread of COVID-19. This led to a decline in economic activity, resulting in revenue shortfalls, a move that has triggered the need for credit to kickstart the economy.
We have two choices as a country. One, cut expenditure tremendously. We don't need to look at a few things. No, cut the appetite to spend.
But the government says it will now prioritize short-term loans in order to reduce the cost of debt. Ugandan authorities also plan to put in place initiatives to boost exports, to increase foreign currency inflows, but also reduce outflows by promoting import substitution. Michael Baleka, CGTN, Kampala, Uganda.
Egypt is taking steps to enforce workplace diversity in the business sector by increasing female representation at the highest levels in companies. The central bank and stock market are demanding that all banks and listed companies have at least one female director on their boards. CGTN's Yasser Hakim reports from Cairo.
Dalia Sawah is the managing director of an engineering company and chairperson of a trade and investment firm in Egypt. She has climbed the ladder from the bottom to the top of the business echelon, and it wasn't easy.
I want to tell you that I'm the only female director in the whole company. The community and culture is male-oriented, which was a challenge for me and any woman who wanted to prove herself. But lately, a law was ratified to ensure more women representation in parliament, in government and other fields. The last 4 years saw a marked improvement in this direction. Places where more women took leading roles have seen significant expansion and growth.
The government's drive to empower women in business has picked up steam during the last year and has been encouraging businesses to give opportunities to more women to assume managerial positions. Already, the central bank and the stock market have issued a directive that requires all banks and listed companies to hire at least one female on their boards or face delisting from the stock market.
Currently, 53% of listed companies have at least one female on their boards compared to 47% in 2019. Also, an application called Empowering Women has been set up by the government. It compiles a database of CVs and resumes of women with experience and careers to help companies locate and hire female candidates for executive positions on a regular basis. We have a plan and strategy to ensure women representation will reach 25% by end of next year.
And the target is not only getting more board members, but also empowering women to lead small and medium-sized enterprises.
The state is giving extra attention to the SMEs and considers it the backbone of economic development. The Ministry of Planning is providing training courses, diplomas and skills for women to be able to manage the small projects. 50% of SME loans are provided to women, and statistics show that they have been more consistent in repaying loans than men. Less than 1% of women have defaulted.
From her personal experience, Dalia feels women have a better chance now to succeed than before.
A woman is ambitious by nature, and whenever she finds support, it encourages her to achieve more. The opportunities we are afforded now gives us the strength to improve our skills and to reach higher grounds. Women have more potential than men. A woman has the talent of multitasking, and this is scientifically proven. My advice for any woman is to discover her inner talent, develop her skills, and create targets to achieve. Set up a plan and make it a reality, regardless of the challenges you face.
Meanwhile, more state funding is in the pipeline to support female entrepreneurs as the drive continues for a better status for women in Egypt. Yes, Hakim for CGTN, Cairo.
E-hailing platform Bolt has launched a women-only service in South Africa that enables female passengers to request rides from female drivers. South Africa has one of the highest statistics of gender-based violence in the world. Bolt is hoping to provide a service that will help keep women of all ages safer as they move around. CGTN Sumitra Naidu has more.
Bolt ran a pilot in November and December 2020 to test the market and see how best it could transport females in particular. The new ride offering has now been introduced in 10 cities across the country.
It's a category that you can find in the Bolt app where women are able to request trips only with other women drivers. So more than 50% of the passengers on our platform are women. However, less than 5% of the drivers are women.
The new offering is an ideal win-win in terms of safety for both female passengers and drivers.
It's really comfortable for me as a driver because I'm driving a female, maybe with the kids or with her sisters, because a female rider cannot request this with her husband. It has to be her. It makes me relax when driving because I don't have to worry about the person behind me. You know, especially when driving a man, you know, when men need attention, when they want to draw your attention, they want to touch you or tap you like, hi, oh, hello, hello. And those uncomfortable and those questions.
While this is an important and necessary initiative, its success remains to be seen. Last year, a young entrepreneur from Cape Town started a similar initiative, but was threatened by taxi drivers and forced to close down.
The transport industry in South Africa can be competitive and ruthless. Taxi violence is an ongoing issue as drivers fight over routes. The industry is also majority run by men. Women are often forced to travel under these circumstances.
Yeah, I mean, in South Africa, unfortunately, we live in a violent society. So we do whatever we can to mitigate those risks on our platform. We screen every driver before they come onto the platform to see, do they have a professional driver's permit? Then they need to do a criminal background check. And then there is the rating system that is in place for every single trip.
Over the years, we have developed tricks as women in terms of taking the number plates. We had to make fake phone calls inside the car so to scare the driver, because you don't know, especially at night. So we've had those situations happening where you're scared inside the car, you're not completely relaxed. So now with this feature, it's safe, I feel, and it's going to be easier for women to relax when they request these services.
Sumitra Naidu, CGTN, Johannesburg, South Africa.
It's 1:30. Let's take a short break. Coming up. UK's economy shrinks a record 9.9% in 2020 on the fallout from the coronavirus. And the magic behind red envelopes as people around the world celebrate the Chinese Lunar New Year.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
Let's look at other headlines at this hour. And refugees who fled into neighboring Cameroon from Nigeria due to the Boko Haram insurgency will soon be brought back home. Officials say the process will be voluntary and will target over 46,000 refugees who now live in camps located in Mokolo in the far north of Cameroon. This follows an agreement between officials from Borno State and the Cameroonian government. Uganda has heightened its alert level at the border with the Democratic Republic of Congo. The move comes after an Ebola case was recorded in Butembo, a city in the DRC's North Kivu province. Butembo is 72 kilometers from the Ugandan border. Egypt's Hurghada city hosted another round of Libyan constitutional talks. The talks are aimed at creating a legal foundation for Libya's current political transition. The president of the Elections Commission this week joined the meetings that bring together representatives from rival administrations in the East and the West. And South African President Cyril Ramaphosa says the crisis his country is facing in the midst of the COVID-19 pandemic is an opportunity to build a different and better South Africa. President Ramaphosa delivered his annual State of the Nation speech to Parliament on Thursday, nearly a year after South Africa recorded its first positive coronavirus case. That's a look at the day's headlines. Heathrow Airport is preparing for new border arrangements that start on Monday. Residents of the UK and Ireland arriving in England from the places on the government's red list will have to purchase a quarantine package that costs $2,400 per person. It covers accommodation, virus testing and other items. Anyone arriving in England and found to have lied about a recent visit to a country on the British government's travel ban list of 33 countries faces up to 10 years in prison and a new tough coronavirus border policies. Individuals not abiding by the rules, including those arriving from a red list country without a hotel booked, could also be subject to a series of fines. And still in the UK, the economy shrunk by a record 9.9% last year on the fallout from the coronavirus pandemic. However, gross domestic product grew 1% in the fourth quarter after an upwardly revised expansion of 16% in the third quarter. The economy grew by 1.2% in December last year due to the impact of looser virus restrictions in parts of the country. This has sparked hope that the UK could potentially avoid a much-feared double-dip recession, regardless of the new strict lockdown that has now been in place since the start of January. Much of the UK re-entered lockdown in early January to curb a COVID-19 variant that was deemed more transmissible.
I think this point on our comparative economic performance is important to clear up. Now, we calculate GDP in a different way to pretty much everybody else. And if you either correct for that difference or look at it in a way that's more comparable nominal GDP, what you find, as the Bank of England and the Office for National Statistics have pointed out, what you find is that our performance then is very much in line or comparable to other countries. And in fact, maybe on the margin better than places like Canada, Germany, Italy and Spain.
It's been over a month since Brexit, and it turns out the Netherlands is keeping up businesses lost by the UK. Amsterdam has surpassed London as Europe's largest share trading centre last month. Stefan de Vries reports.
This is the birthplace of the world's first stock exchange. In 1602, the Dutch East India Company was the first company in the world to issue publicly traded shares in this building. The idea of a stock exchange became one of the most successful of Dutch exports. Today, 4 centuries later, there's another success to celebrate. In January, Amsterdam surpassed London as Europe's largest centre for trading shares. How is that possible? Well, Brexit. One of the consequences of the divorce between the UK and the European Union is that British exchanges and trading places no longer have the same status as European ones. Half of the European deals, which London banks and brokers would normally handle automatically, shifted to the European Union. From the 1st of January, the number of shares traded in London decreased to 8.6 billion euros a day. And it's not just the trading of company stocks which Amsterdam is anticipating. Earlier this week, US-based Intercontinental Exchange announced it's moving its €1 billion a day carbon emissions trading market to the Netherlands. The loss of the City of London's premier standing in Europe is partly symbolic. It won't really affect the employment levels there. The Netherlands, by comparison, looks to be one of the winners. Amsterdam is once again Europe's leading financial centre, just like it was 400 years ago. Stefan de Vries, CGTN, Amsterdam.
The world is watching how a battle between tech giants Google and Facebook and Australia's government plays out. Australian lawmakers are expected to pass a bill that would force tech companies to pay Australian new media outlets for the use of their news content. Google claims the bill is unworkable and would break the way the internet works. Greg Navarro reports.
The two sides in a bid to compensate Australian media companies for the use of their news content couldn't be much further apart.
It would give us no real choice but to stop making Google search available in Australia.
Australia makes our rules for things you can do in Australia. That's done in our parliament, it's done by our government, and that's how things work here in Australia. And people who want to work with that in Australia, you're very welcome. But we don't respond to threats.
An 18-month investigation by Australia's competition regulator concluded that the tech giants held too much market power in the media industry.
It found that there was a substantial bargaining power imbalance when it came to the ability of news producers to negotiate with Google and Facebook on the use of their content.
The competition regulator also found that Australia's media landscape is shrinking because of falling advertising revenue. The solution is legislation that would force the platforms to pay local media companies for their content. Google and Facebook would have to negotiate a payment with individual media outlets.
It's got the support of all the major parties. It's endorsed by all the major news organisations. This is good policy to regulate big tech, and big tech needs to recognise that when they operate in a democracy, the laws of the land should apply.
But critics contend the new law is a way of propping up a struggling media industry, and the tech giants argue that news media companies already receive a benefit from appearing in Google searches and in the referral traffic from Facebook.
The big uncertainty, though, is what's the value of that benefit? How do you actually calculate say, the benefit that platforms provide to news producers in contrast to the benefit that news producers provide to digital platforms.
There's been a lot of discussion of different ways of regulating these social media giants.
University of South Australia lecturer Damien Spry believes the legislation isn't fair to tech companies, in part because there's no accurate and universal way to determine the value of content produced by news media companies.
So they're getting paid to produce something that may or may not have value.
Experts point out that from Google and Facebook's perspective, Australia is not the most important, nor is it the most profitable market around the globe. And it is certainly not one, they say, that the tech giants can't afford to live without. And they can't afford to agree on a law that would set a precedent, allowing other countries to create similar legislation.
I don't see Google or Facebook agreeing to participate in this, and they can't be compelled to if they decide to leave.
Spry also says there's no guarantee that a compensation scheme for news media companies will guarantee better journalism, especially when there's a temptation to simply produce more content to bring in more revenue. Greg Navarro, CGTN, Melbourne.
Oil company Shell has set out its strategy to accelerate operations to try and achieve net zero emissions by 2050. Significantly, though, it isn't planning to alter its oil and gas operations, despite the pollution attached to greenhouse gases and climate change.
A tough year for the Royal Dutch Shell Company, like many others. Earnings fell by 71%, down from $16.5 billion in 2019 to $4.8 billion last year. Job cuts are expected, possibly up to a tenth of the 83,000 currently being employed globally, to deliver their new energy strategy.
Change to deliver on 4 goals: delivering shareholder value, powering lives, respecting nature, achieving net zero emissions.
In contrast to some of its competitors, Shell will be investing less in wind and solar energy, but does intend to keep producing and trading its oil and gas reserves for the coming decade. Shell is reported to trade 13 million barrels of oil per day, about 13% of the global demand before the pandemic. The company says it passed its peak oil production in 2019.
To just say, we're going to not produce that carbon ourselves anymore, we're going to buy it from somebody else and then sell it to our customers, would do no service to the planet. The innovations of Shell are better deployed to figuring out, together with our customers, how we are going to help these customers not use oil and gas products anymore. And then indeed, at some point in time, the supply of oil and gas is going to be somewhat of an irrelevancy, if you like.
So how does Shell intend to reach its net zero emission target by 2050? Well, it plans to rebalance its businesses by adding 11,000 retail outlets and attracting 10 million new customers. It'll expand its electrical vehicle network from 60,000 charging points to 500,000 and link the salary of 16,500 Shell staff to how successful they are in driving down the company's carbon emissions. Balancing how to reduce carbon emissions but keeping its investors and shareholders happy is tricky for Shell, especially as most developed countries are keen to follow the lead given in the Paris Agreement and limit the rise in global temperature to 1.5 degrees Celsius. But most of our vehicles run on petrol and diesel, and that pollutes the atmosphere and affects public health. Shell executives promise to increase biofuels production and develop their electricity and hydrogen networks. They promise to ramp up changes in an open and transparent way. Yolo David, CGTN, London.
A recent study by research firm Bain & Company has found the global market for luxury goods sales in 2020 is set to fall by 23% compared to the previous year. But that's not the trend in China. Its southern Hainan province has set off to become a hub for not only tourism, but shopping, having opened several tax-free shopping malls. CGTN's Omar Khan has this report.
The tropical island of Hainan is home to some of China's most picturesque beaches, coastlines, and waters. That's poised cities like Sanya to usher in widespread development, especially in the hotel and tourism sectors. With flocks of visitors coming south for the Chinese New Year, the province in recent years has shifted focus to another money-generating industry, retail and luxury goods shopping. With China's Spring Festival now fully underway, many are still looking to buy gifts for both their loved ones and even themselves.
One recent market research report found that China's market for luxury goods will be the largest in the world by 2025, making Hainan's duty-free tax shopping malls that much more important to both domestic consumption and retailers. This is just one of 9 duty-free shopping malls in Hainan. Top global luxury brands can all be found here, be it watches, handbags, accessories, and makeup products. With the luxury goods market in China growing by a staggering 48% last year, reaching nearly 346 billion yuan, that's roughly 53 billion US dollars, the benefits of these malls are starting to pay off.
The advantages of the Haitan Bay duty-free mall are substantial. We're able to work under the tax-free policy, which means there's a price difference between our products and those outside the tax-free market. All of the products here are brought in from their place of origin as well. We also have a strong after-sales services system.
A report published earlier this month found duty-free prices for luxury fashion and lifestyle products in Hainan are 10 to 25% cheaper than prices elsewhere in China. With savings like that, it's no wonder consumers are opening up their wallets.
I came to buy foreign brand products, some summer clothes and sunglasses.
It's cheaper. I just was looking at 40,000 RMB gold. I can save 10,000 on it here.
I think it's cheaper and also more convenient here. It's definitely cheaper than domestic stores.
Behind all of the browsing and shopping, various economic factors are at play, giving China a big spending boost. With sales of luxury goods having fallen by 36% in Europe and 27% in the US, experts say the Chinese market has all the necessary conditions to become a global leader.
China's middle-income population is very large now, nearly 400 million people. This has led to stronger overall purchasing power here. It's been forecast that over the next few years, income levels will continue to rise along with the economy. This all indicates that the Chinese market has potential for a greater luxury goods sector.
And as for the future, Hainan already has plans in place to make shopping easier, with direct delivery to other parts of the country, more foreign brands, and even more duty-free shopping centers. Omar Khan, CGTN, Sanya.
As people take time off work for the Spring Festival holiday, some of their jobs are being delegated to robots. CGTN's Sonia had some of those non-human touch.
For many of us, sitting down with a cup of pour-over coffee is great for chilling out in the Golden Week holiday. But what if the barista is on holiday too?
While this robotic coffee master is standing in, tirelessly and meticulously. It grinds, boils, pours, and cleans after itself, taking after real coffee masters. Action Coffee had one installed last year to limit human contact as part of its pandemic control measures, but found the robot brings other perks.
The robot frees up one person for us. Making pour-over coffee requires a barista's full attention. No distraction allowed for 5 minutes for every 1 cup. Now we have a robot to do it for us. Besides, it looks cute.
Joe says the robot can make up to 100 cups every day if not limited by closing hours, allowing some of her staff to go home for the holiday.
And over Chinese New Year in several malls in Beijing, it's robots like these that are putting in extra hours. 小爸小爸新年好新年好新年到小爸祝您新的一年幸福安康
The robot has a touchscreen, but as many try to minimize touching services these days, it's mostly controlled by voice. The guiding robot greets, gives directions, and doles out location-specific coupons.
There are fewer staffs in the malls now, and not all of them are familiar with the layout in shops, so having a robot as a guide is quite convenient.
We've used it a while now, mostly for finding places. My son really likes it.
The robot's developer Cheetah Mobile says over 10,000 robots are working in more than 1,000 shopping malls nationwide. While they're not yet entirely the smooth operators they aim to be, for now, they're surely delightful enough. Sun Ye, CGTN, Beijing.
And a very happy New Year to all our Chinese colleagues and everyone celebrating the Chinese Lunar New Year. across the world. Shinyan Koila. All right, so look at the commodities market, and oil prices ended the day stronger in sharp contrast to the pattern we saw earlier in the day. Prices slipped this morning for a second day in a row as major forecasters warned that the global demand recovery is still fragile, and as the US dollar strengthened. On Thursday, the International Energy Agency warned that the oil market rebalancing looks fragile in the first quarter of 2021. Although it continues to be optimistic that global oil stocks will rapidly draw down in the second half of this year as demand rises. Still ahead on global business. The Ugandan startup that's developed a mobile application for garbage collection.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
I've been Shiwishi, Tunis, Cairo, Juba, Johannesburg, Ethiopia, Tanzania.
Africa Live. Find your voice.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Kanata, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
Welcome back. Egypt has sold $3.7 billion in Eurobonds this week to partially reduce the $8 billion deficit gap in the state budget. Authorities in the country say low global interest rates on long-term notes have prompted the country to tap the international debt market to extend the maturity of public debt. From Cairo, here's CGTN's Yasser Hakim with the details.
This is the first time in 2021 that Egypt has tapped the international market for financing. The issuance included the sale of $750 million in 5-year bonds at 3.875%, $1.5 billion in 10-year bonds at 5.875%, and $1.5 billion in 40-year notes at 7.5%. The $3.75 billion Eurobond was a surprise, since the government had earlier denied it was planning to raise funds from the international market.
The Minister of Finance could have covered the budget gap from the foreign currency reserves of the central bank, but the government wants to diversify the sources of debt to have more hard currency. The aim is to finance part of the budget deficit as there still remains a gap. The finance minister said he would fund the rest of the deficit through different sources like the IMF or local commercial banks and other mechanisms.
The sale was oversubscribed 4 times, with $15 billion worth of orders received. Some experts believe the high demand reflects investor confidence in Egypt.
If we look at the latest bond sale, we managed to release the 40-year notes, which we couldn't do last year, and the return on investment is 7.5%. This shows how strong the economy has become and how lenders are confident about Egypt's ability to repay the debt. The very high demand, which was fourfold, is also a reflection of the trust in Egypt's economy that has seen growth rates at a time when most economies contracted during the pandemic.
In the meantime, Egypt's finance minister, Mohammed Mait, has said that the North African state will not re-enter the international bond market again during the first half of 2021. Yes, Hakim for CGTN, Cairo.
Let's shift our attention to Uganda, where a group of young entrepreneurs are hoping to solve the problem of poor waste disposal in the capital, Kampala, through a mobile application called Your Waste. They're linking garbage collectors to people that are in need of the service. CGTN's Hilary Ayesiga reports.
The next day as a must. Yeah, they're supposed to be seen.
This team of high-tech entrepreneurs are hoping to solve one of Kampala's major problems, garbage. They've designed a mobile application to ease the work of garbage collectors. And with just a click, a waste hauler is at your doorstep.
A person in the community can just simply use this application that is on their phone, right? They're using their smartphone every day. So they can just use that smartphone to order for a waste pickup at their convenience, right? They can be at work, they might even be outside the country and order for a waste pickup. And we can connect them to a waste hauler in their community.
Over 100 clients have subscribed to Your Waste service.
It makes work easier. We're always in touch with them. It's easier to know their problems. They're easier to come to us. Payments are made easier. Less contact.
And for homeowners, the service is timely.
The system is good. It doesn't allow waste to pile up in an area. It is convenient and promotes hygiene.
Environmentalists say poor waste disposal is the leading cause of pollution in the country. This truck collects about 24 tons of garbage every day, but local authorities say it's not enough to collect all the garbage disposed of in the city. Government statistics show that over 350,000 tons of waste is generated annually from the city, and only half of this is collected.
We have a few challenges that we're working on, say solid waste management, to ensure that bottles, to ensure that polythene are all managed well and taken out of our drainages.
They are now encouraging people to recycle waste.
We can be able to send over a truck that is just going to be able to collect that organic waste and take it to a recycler that is recycling, let me say, organic waste briquettes. Collect the plastic waste, take it to a person that's recycling it. Collect paper waste, take it to a person that's recycling it. In that way, we're trying to make sure that the waste is not only decreased in Kampala and taken to a landfill, but also decreased from the landfill itself.
The innovators of this mobile application hope that by the end of this year, they will have over 10,000 households in the capital Kampala using the mobile app, a move that could help save the environment from choking with waste. Hilary Ayesiga, CGTN, Kampala, Uganda.
Right, a look at the currencies now. And Friday recorded gains by the Nigerian naira on the official market, but losses continue in the parallel market. The Nigerian currency was quoted at 450 to the dollar in the black market today. The currency has been weakening due to a scarcity of foreign exchange in the country. The cedi in Ghana continued a weakening streak to trade at 5.8 to the dollar. And with that, we come to the end of Global Business tonight. We'd love to hear from you. Send your feedback to the contacts on the screen and follow us on our digital media platforms. I'm Peninah Karibe.